Welcome to Dad's DeFi Space. I'm Kevin, and today we're going to look at some other tools we can use to.
Greetings and welcome to Dad's DeFi Space. Today we're going to be looking at the 4-year cycle theory of Bitcoin and how we can use that knowledge to make better investing decisions in the cryptocurrency markets. Please take a moment to like and subscribe to the channel and ping that notification bell. And take a minute to look at our links below and support the channel. TradingView, $15 off, 10% off both hard wallets by Tangem, the most secure wallet out there, easiest to use, just a little credit card, and Coin Ledger. And don't forget about the Underdog Investor Group and Crypto Labs Research free DeFi course. Links in the description. Let's begin. But we're going to talk about how to invest in Bitcoin using the 4-year cycle theory. And I think most people in these markets subscribe to this. And then afterwards, we'll briefly look at some charts. Bitcoin's 4-year cycle theory pretty much says that each cycle of Bitcoin includes a bear market that lasts approximately 1 year, and it's usually a brutal bear market. And then a bull run that lasts 3 of the 4 years. The bull run slowly becomes parabolic after the Bitcoin halving. And all of this is basically an effect on Bitcoin supply and demand. Of course, the group think, because everyone just thinks it's going to happen. And so they try to front run the markets. Okay. So without further ado, we're going to discuss a little bit about how to use the 4-year cycle theory of Bitcoin to drive our decision-making process in these markets. Now, I do not have this marked on the chart, but where the mouse is right now, here, would be the bottom of the first bear market. The next one would be right here. That was the bottom of the second cycle, which actually would have fell close to August of 2014. Our third one, our third bear market, the one that I got to experience, the bottom was right here. And that was, gosh, right around July 18th. And then finally, we don't know yet because we're still in the 4th cycle right now. Now, one thing to be very aware of is that these cycles are becoming less volatile and there's less percentage gain and less percentage loss each cycle. This is called the theory of diminishing returns. You will sometimes hear people talk about this on X or on YouTube. Now, what I'd like to show you here is what happens after each Bitcoin halving. If you look real close, you have a Bitcoin halving 2012, 2016, and then most recently, just in 2020. The first cycle, we saw gains after the halving of 7,976%. I can't even imagine. After the next cycle, we saw 2,867. Last cycle, Bitcoin saw gains of 667%. And then this cycle, we're not for sure yet. Who knows? All these people on Twitter and YouTube said they would. They don't. I will tell you this. My first sell is going to come right around $80,000. And now that, not a number, it's going to be more so based off of metrics. Ones I've mentioned before, like the Puro multiple, looking at the rainbow price chart, looking at the MZRV score. And by the way, you can find all of that on lookintobitcoin.com. I have a great video on that. You can find it on my channel. Which, by the way, please, anyone who's here, like and subscribe to the channel. You can also support the channel by visiting any of our links below. Yes, they are affiliate links, but they are products that I'd use myself. CoinLedger for crypto tax software. Tangem hard storage devices are my favorite, easiest to use, and most secure hard wallets. And also TradingView for charting. And also those who are interested in a little bit of DeFi, I would recommend Crypto Labs Research. There's a link in the description. Or downloading their DeFi for a Business, their free How to DeFi, How to Do Crypto course. All right, let's get started. So Bitcoin's 4-year cycle theory, it follows a predictable 4-year pattern that's influenced by the halving events like we just talked about. The halving events happen approximately every 4 years. And basically all it means is the rewards for Bitcoin mining, they're cut in half. This has significant implications for Bitcoin's price and for their supply. What that means is Bitcoin, their price is going to be affected by the decrease in supply that happens. So the last Bitcoin halving before it, I think Bitcoin was like 6.5 Bitcoins per mine block or something like that. Once this last halving occurred, that dropped by 50%. That means 50% less Bitcoin is getting produced each day. This has significant effects on Bitcoin's price. But it takes a while for it to go through the markets, very similar to like the Fed raising and lowering interest rates. Now, that variation of time usually lasts approximately 6 to 12 months. So if you need to understand that Bitcoin cycles every 4 years between one bear market year, 3 years that are considered the bull run, you can also divide each cycle up into 4 phases. And this is what you can use to help your investing decision making. So in the 4-year cycle theory, as far as phases are concerned, the first thing that's going to occur is the accumulation phase. And the accumulation phase is going to be basically right after the bottom drops out during the final capitulation. Okay? After the final capitulation, this is when all the smart people are buying. Now, I never would suggest being all in on the market all at once, but these are excellent times to, I choose to DCA into the market. This is also when I start to build my spot positions. Excuse me. Now, the second part is the bull market. Now, this is the part that can last up to 3 years. Now, the interesting part of this is during a bull run, there can be 50, 40, 60% corrections. And that's Bitcoin. Ethereum and altcoins can bleed down even worse. This is a risky market. Likewise, that's why you can make some of the biggest gains here. But you always have to mitigate your risks. So you got to think about what are the best times that you should be dollar cost averaging into the market, and what are the best times to dollar cost average out of the market. Off top, or excuse me, happens after the third one. That's the peak. Now, during the peak, this is when Bitcoin is in price discovery. It's past time of it breaks its all-time high. Everyone's going to be calling you an idiot if you aren't buying. I am not buying at this point. At this point, I'm doing nothing. Looking at some charts, maybe. Sometimes flipping around some of my liquidity positions, maybe. But I'm not sitting there trying to position my portfolio making lots of purchases. I have been dollar cost averaging into the market. Now, after the peak, you're going to have a blow off top. Soon after, this is what everybody calls altcoin season. So Bitcoin goes on a parabolic run. Profits roll into Ethereum. Ethereum goes on a parabolic run. Profits go into other altcoins. So I like to start rotating my capital as Bitcoin makes an all-time high. Not all at once, I'm dollar cost averaging. That's part of the reason why I like liquidity positions, because I can take a altcoin paired with a stable coin and it's doing the dollar cost averaging for me. Why I'm earning fees, because as my asset is getting converted into USDC or American dollars, I can set when I want it to be the lowest it will buy, all the way up to when there would be none of the altcoin left, and it would all be USDC. But the entire time of the range, I can earn fees as people trade. I like being a market maker. I want to show you one more thing, and I want to explain why I believe in the 4-year cycle. First, all previous cycles have done this in the past. Until a cycle doesn't follow this, the trend isn't broken. And the trend is your friend, man. Also, I'm a believer of supply and demand dynamics. Supply and demand dynamics would say that as less Bitcoin's being produced by the miners, as more retail and people come back into the market, as more liquidity starts pouring into Bitcoin, into Ethereum, into altcoins, price is going to go up. You just have to position yourself for risk management. Don't throw all your money into crazy meme coins. And you would also have to be careful of not letting your emotions dictate your decisions. That's the biggest killer of wealth in this space. Stock market too, but this is much more amplified because it's crypto. My other piece of evidence would be just general market psychology, fear and greed, investor behavior. So if you can manage your fear and be buying when people were fearful and selling when people were greedy, just like Warren Buffett said, you're going to be okay in this space. I want to end on this. This is the Wall Street cheat sheet. I want you to take a screenshot of this. I want you to download it off of Google or buy a poster, something. You can practically put Bitcoin's 4-year cycle chart over this, and it follows the 4-year cycle almost perfectly. This point right here in the very bottom, that's going to be the bottom of your bear market during the depression phase. But think about this for a second and just read these words. Hope. We're coming out of the bear market. Man, there might be a recovery. Boom. There's some drops. There's some drops. People are getting scared out of the market. We're going to either be here, maybe we're here, in my opinion. But soon, what comes? Optimism. Is the rally real? This is it. It's time to get fully invested. Everyone's like loading their capital into the market, but then it becomes thrilling. I'll just buy more on margin. 50x leverage. Decisions we should not be making. The euphoria is what happens at the blow off top. I'm a genius. Everyone's going to be reached. But this is what you got to realize. At this point of the market right here, every single joker who's bought Bitcoin, ETH, and Solana, and Toncoin, and Near, and AVAX, and ADA, whatever you're into, all of them are going to be in profit. Everybody. But no, not everyone's going to leave with that profit. Someone or many someones get left holding the bag. Don't let that be you. When you understand your own emotions, you can actively do things to minimize this. And by understanding the 4-year cycle, we know, hey, everyone's getting euphoric. I better be exiting out of the market. Dollar cost averaging. And likewise, you're at the bottom when everyone's angry, depressed, and never coming back. Probably the best time to buy. So I hope you learned something from our stream today. Take a final look at the 4-year cycle theories. On this chart, you can see that the green areas are the bull run, the red areas are the bear run. But you got to realize these are bear markets. The bear markets can last, a good 12 to 16 months, but the bear runs can last, the bull runs can last even longer. So I hope this has been informative today. Please like and subscribe to the channel and check out any of our links over here. If you'd like to learn more about crypto and DeFi investing, such as yield farming, providing liquidity, or lending pools, check out the links below for Crypto Labs Research. They offer a free DeFi course. They have the UIG, Underdog Investment Group. You get 20% off your first month and grow your portfolio and yourself.